These are 5 warnings for the Bitcoin bull run. Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. Bitcoin is extremely volatile. Just as fast as the price goes up is just as fast as the price can come down. If the price of Bitcoin went up 15% in 7 days, 20% in 14 days, it could come back down the same amount or even more. In the short term, Bitcoin can be very dangerous. If a person needs the money today, tomorrow, even within that same year, it might be a big risk. You can lose a lot of money in cryptocurrency, especially in the short term. Right now, I'm focusing on the short term, not on the long term. So if a person is investing in Bitcoin, generally, the idea is maybe use money that you're okay losing. And this is even more true when thinking about the short term and the high volatility that comes with Bitcoin. Have a low time preference. And I like the way this article put it. Time preference, the most underappreciated mental trait. And this is simply having the ability to hold on to an investment for a long time. I know it's confusing. You might think high time preference means you hold it for a longer time. High time preference is a shorter time. Low time preference is for a longer time. And when you look at the charts, when you look at the long term, someone with low time preference, the price of Bitcoin, even though it is volatile in the short term, it is volatile in an upward trend. And that's why every year the yearly low is higher and higher. Bitcoin, if you look at a 3-month chart, it looks like it is going up and down, up and down, up and down. But when you zoom out on this 5-year chart, you can see that even though Bitcoin is volatile, it is moving in an upward trend. And now I'm going to show you something which I really find quite amazing, and I think you will as well. When we look at the charts, we can see that the long time holders have greatly benefited just by simply holding on to Bitcoin. If you look at the price history, today, Bitcoin is trading at about $15,500. So from December 11th, 2017, up until January 8th, 2018, this 1-month period is the only time in Bitcoin's 12-year history that someone would not be profitable if they bought within this 1-month period out of 12 years. And this goes to show someone that over the long period, the people that have been stacking Bitcoin little by little, holding it slowly, without trading, without selling, have been able to benefit in the long term. Look at this again. I think this is crazy. Just from about December 11th to January 8th, 1 month out of 12 years is the only time to date that a person would not be profitable buying Bitcoin. Understanding crypto taxes is super important. Pretty much everything in crypto is taxed. Of course, selling crypto for cash is a taxable event, but the one that gets people into trouble is not understanding that trading crypto for another cryptocurrency is a taxable event. And this got this famous Reddit user into a lot of trouble during the bull market of 2017. What this person did was trade a lot of cryptocurrency in 2017, and they made massive gains, somewhere about $800,000, I think it was. And then they took that money that they were trading with and they carried it over into the next year, into 2018. And of course, in 2018, the crypto market crashed. So this person still owed tax from the previous year, but they took that money, traded it, carried it over into the next year, and lost all that money. So now this famous Reddit user owed tax on whatever it was, $800,000 worth of crypto gains, but they lost all their money in the next year. So understanding that crypto to crypto trades is a taxable event. Of course, if a person, let's say, makes a $10,000 profit in the year, either selling for cash or trading cryptocurrency, if they continue to trade within that year and lose the $10,000, they're back at zero. They don't owe any tax. But if a person sells for cash for a gain of $10,000, or they trade a crypto for another crypto for a gain of $10,000, and then they take that money and carry it over into the next year, it does not matter that the year passed. They still owe money for the previous year. And the risk is that when you carry that money or those gains into the next year and you use that to trade, you might lose all that money. Now you don't have any money for tax. Crypto taxes are complicated. I stay up to date with them. I use CryptoTrader.tax, and I left a link in the description below with a coupon code if you were thinking about using it. It is an affiliate link, so if you were considering using CryptoTrader tax anyway, it would be a great help if you use that link because it really helps support the channel. Thank you. Do not use a credit card to buy cryptocurrency. And it's pretty simple. Why? Because you can overspend. You're using money that doesn't actually belong to you. Typically, we see this with people that use credit cards for large purchases. They overspend with money they don't have. This article says that you run the risk of your credit card information being stolen if you don't use a trustworthy exchange. This one I'm not too worried about because there are many exchanges out there with good reputations that accept credit cards. You may go into debt for buying Bitcoin that have a highly fluctuating value. So a person goes ahead, buys cryptocurrency, and then all of a sudden the price crashes. Now, they don't have any money, they don't have cryptocurrency, they still owe money to the credit card company. So very risky. And then of course, you're going to pay transaction fees that are so high. On CoinMama, you can buy cryptocurrency with a credit card. Fees from 4.9% up to 5.9%. These are extremely high fees, which you can easily avoid just by not using a credit card. Even on Coinbase, where you're not allowed to use a credit card, you're able to use a debit card. And the fee is 3.99%, very high. Even when using Coinbase, their regular fees when you're using crypto from a bank account to buy crypto is about 1.49%, which is not crazy. But if you truly want cheaper fees and just make it simple, sign up for Coinbase Pro. Once you already have a Coinbase account, just go ahead, sign up for Coinbase Pro, and you'll be paying fees less than 0.5%. And in the long run, if you're serious about cryptocurrency, it will be the difference between thousands and thousands of dollars. And this might be the most important one. Do your own research. I have seen on Reddit groups, Twitter posts, Facebook groups, people asking, should I buy this cryptocurrency? Should I buy that cryptocurrency? I don't even know what this cryptocurrency does. Should I buy it? Recently, I have been getting messages and text messages from people that I know asking, should I buy Bitcoin? How much should I put into it? Is it a good time to invest? I don't know anything about it. That's why I'm asking you. So a general rule is that a person should not put money or invest into something that they don't know anything about. This doesn't mean that a person should never invest into something they don't know about. What it means is a person should first do their own research and learn about the subject. There are many resources out there to learn about Bitcoin and cryptocurrency, but it's all scattered. I find the most efficient and quickest way to learn about Bitcoin is by reading the Bitcoin Standard. You can read the book, you can listen to the audiobook, and if you don't like to read, I'm sorry to tell you, but the probability of you doing well in the crypto space is very low. I hope these tips helped, and if you have any other tips or warnings for the Bitcoin bull market, please put them down in the comments below. Like the video, subscribe to the channel. Thank you for listening, and I'll see you next time.